Welcome to the Travelex Weekly Outlook. It's the week of November 22nd and the dollar's off to a pretty resilient start. During the overnight session, the dollar did fall to its lowest level in a week against the single currency. That came after news that Ireland finally accepted to receive financial backing from its European neighbors and the IMF. That helped the euro rally across the board. That actually dragged up higher risk assets such as stocks and currencies like the Aussie and the Canadian dollar. But the rally in the euro and some of those riskier assets didn't last very long. As a matter of fact, investors once again, they are concerned about other issues in the broader Eurozone economy with debt in places such as Portugal and Spain. That is likely to drag on the euro in the coming days and weeks. But the dollar eventually did rise off its overnight lows. In fact, investors did file back into the safety of the U.S. currency as investors really examined the likelihood that other nations in the Eurozone are likely to encounter some debt problems as well. Last week, Europe's debt crisis was again the main driver. In fact, out of Ireland, concerns about the Irish debt crisis did weigh on the single currency. In fact, early in the week, last week, the single currency had fallen to its lowest level in 7 weeks. But as the week progressed, we did see the euro pare some of its earlier losses. In fact, it actually ended the week broadly flat against the U.S. currency, and that was on expectations that Ireland would eventually cave in and accept outside help for its debt crisis. At the same time, there were some concerns about the U.S. Economic data calendar last week. There was several reports on U.S. inflation. They came out relatively tame, and what that did was reinforce the Fed's easing bias towards monetary policy. And of course, that easing bias, that had been the driving force in the dollar's recent downtrend to multi-month lows. For the week ahead, it's going to be an abbreviated one with holidays in the U.S. and Japan, but nonetheless, it's going to be one that's chock full of U.S. data. Investors will look at a second reading of U.S. growth during the third quarter. There will also be some key housing surveys that are due out. And then the consumer comes into focus as well. There's going to be reports on U.S. consumer spending, consumer income, and the all-important consumer sentiment survey. Keep in mind, consumers, they really account for the majority of U.S. economic activity and therefore carry a lot of weight in gauging the strength of the U.S. recovery. Lastly, for the week ahead, investors will look at the minutes from the Fed's early November meeting. That's at one meeting when the central bank embarked on another round of quantitative easing. That has one that's been met with a lot of controversy from around the globe, not only inside the Fed, but also from a lot of market watchers across the world have really called into question the need for the Fed's latest attempt to revive the U.S. economy. But that is it. We do have a busy week ahead, and please check back online anytime for the latest on the U.S. currency. And have a happy Thanksgiving.